All right, guys, it's that time to discuss what I'm buying this month. And with all the chaos and churn going on, you figured more discounts would be here, but they just haven't materialized yet across the board. But that doesn't mean there are not some stocks that are on a discount. So I'm going to give those stocks specifically today, the why behind each pick, exactly why I believe they're on a discount, why I think they're a great buy moving forward, and you guys can see exactly what I'm buying for the next month. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today. Now remember, these are just the stocks that I'm specifically targeting right now. These are on the biggest discount based upon my valuation, which is the most important thing you can do, is base your discounts based upon your own valuation. But for me, they're the best deals for me right now, my plan, my portfolio, and the stocks I want to buy. And I understand, guys, some of you guys get very, very upset that sometimes my list doesn't change, or maybe the same stock is on my list for 5, 6, 7 months in a row. This is not top 10 hot stocks to pick this month, and then next month I'm going to pick another hot 10 stocks that are going to 10x this month, and all that other trash like that gets retail investors completely destroyed. It's not what this is at all. And I get it. It's been a criticism since I've had this channel back in 2022. Why the heck is Palantir keep being on your list at $6, $7? Why do you keep buying that one? Why do you keep buying Meta at 100 and 90 and 80? Why is that one always on your list? Why is SoFi always on your list at $4 per share? And a lot of other stocks like that. That was the criticism I was getting back then. And the reason is very, very simple, because they happen to be on a great discount. Whenever they go on their big runs, hey, we move on to other stocks. I don't control what the market gives me. I can't control what Wall Street decides to pump up and what they decide to basically crap on and give us incredible discounts on. You've got to understand that as an investor. That's part of being patient. It's just simply taking what the market gives you and moving on with life. So yes, my watch list seems to change. And then whenever a stock has a giant pump up like Palantir, people are complaining that Palantir's not on the list. And I'm like, guys, it was on the list for the previous year and a half. That was the time to buy it, not after it has this huge pump up. And people are like, why aren't you buying it at $100? You're stupid. You're dumb. I'm like, I don't know, because I like buying it at $7 and $10 and $15 better. I don't know, just kind of the way I seem to invest, different strategy, I guess, than a lot of other folks out there. So I understand a lot of these are not that new. That's okay. Still doesn't mean they're not on a discount. Still doesn't mean it's not the best buy for me, my portfolio, my plan, and everything else moving forward. Obviously, you have your picks and everything else in your plan moving forward. Simply execute on that. So the first stock is PayPal. I know, it's PayPal, it's PayPal, whatever the heck you want to call it. They can't get started. I have tons of shares. It's on a great discount, but I have plenty. So I might add a few shares here and there. Not going to be massive buys by any stretch of the imagination, only because I already have a large position plus bonus shares. Obviously, it's bounced up nicely from those 50-something dollar lows there, but still got a long way to go here for PayPal. Just can't get started, unfortunately. But hey, it's here. It's on the list. I might buy a few more shares, a batch of little shares here, a batch of little shares there, and just wanted to bring this one to you guys. Next up is Google. I just released the full 2-year bull and bear case to my group, complete with price targets and how I derive those price targets and everything else there. So if you guys are members, Mastermind members, make sure you check that out. Obviously, I have a summer sale going on right now. You get to keep that price for life. If you want to be able to view that and learn through courses and free coaching and everything else, exactly how to do a valuation, exactly how to set a plan and price targets and everything else that we talk about all the time on this channel, it's the pinned comment down there. You get that price for life. So make sure you check it out, see if your membership's right for you. But kind of coming back here to Google, I don't know why everybody thinks it's behind. They are the leader in their space. They're not, behind in any way that I can see. Nobody's figured out how to monetize AI yet. Nobody's figured out how to make their LLMs, the greatest things in sliced bread. The narrative out there is, Google and search is dying. And despite the fact that earnings show it's actually growing by double digits, but, don't let facts get in the way of a good narrative or anything else of that nature. And oh, by the way, nobody does ads better than Google does. You can make a case for Meta. To me, they're the two best. Everybody else is a distant third. Nobody's catching anything in regards to that, which means that's going to continue to print money into the future. I have no idea why anybody thinks anything differently, but hey, it's the internet, it's YouTube. This is kind of what we get in today's day and age. So hey, you want to keep a great stock beaten down for an extended period of time? Not a problem at all. I'll continue to buy shares. And then whenever it runs up, everybody will be like, oh, how do we miss this? Well, we'll be sitting right there, at least those of us right here on this channel, with a lot of shares and very, very happy shareholders as they continue to make advancements moving forward. And yes, I agree the news about the Justice Department isn't great, but we have seen this before with big tech. It usually goes nowhere, and it takes years to actually play out, go through the court system, go through all the appeals and everything else that goes on. Even if they have to split the business out, I will make even more money as a shareholder. I'm just going to have two stocks instead of one because it all prints money in the end. And you guys also need to understand share count is what matters. It is the key to being a serious investor. I am just simply continuing to execute on a DCA into Google stock until it kind of goes on its next run. Next up is SoFi. It is a great company. They have had an incredible earnings quarter after quarter after quarter, and it still continues to get disrespected by the market, even by retail. Everybody's trying to compare, ooh, SoFi and this stock versus each other, even though they're two completely different stocks. To me, really no correlation whatsoever, but yet everybody that tries to correlate SoFi with every single stock out there that has anything to do that touches money, somehow they're a competitor or behind or, going to take market share from them or whatever the case is. That is not how it works at all, especially in the finance space. If you don't understand how, the difference between a fintech versus a bank, how all the various lending products work, how they actually work on the balance sheet, how they count against the financials, how they can be used differently on the financials versus other companies that don't have those products there. If you don't understand those things, you really shouldn't own any fintech at that stage because you don't understand what you own in the first place. So anytime I see those type discussions or arguments, I generally know, okay, that person really doesn't understand banking on a high level, doesn't understand financial services on a high level, and that's going to create problems for them in the future as all of these companies grow. I'm not saying one company isn't a great company, but to try to make these crazy comparisons to where, oh, man, why isn't SoFi doing exactly what this stock over here is doing? Because they're completely different companies. That wouldn't make any sense for SoFi to do that. And oh, by the way, this product over here that the company over here is launching has no direct correlation to what SoFi is doing. So, those type discussions, those type arguments to me are just simple things to get clicks for us as retail to get all fired up about. And then, of course, make poor decisions like we tend to do whenever these type narratives come up and there's no actual basis behind it. Sound really good on their surface. But if you have a deep understanding of these type products and financial services, you quickly realize there really isn't any reason to correlate this sort of thing at all. And on the flip side, if you're buying SoFi, ignore all the super squeeze to stuff, $75 at the end of the week and all that other stuff like that. You got to ignore that sort of stuff. Understand the actual opportunity that is here. Understand where it is from a valuation perspective and continue to buy based upon your plan. So for me, it's a little bit above my price target right now, but it won't take much to put SoFi down there under that price target. Again, it's at an early part of its journey, right? It's not the same as Google where it's very, very late, and getting a massive discount on Google is going to be really, really hard to do. We're getting a great discount on Google, but getting a stupid discount on Google is going to be really hard to do. SoFi is a different type stock, obviously much more trader owned. And so therefore we're going to get a lot more volatility. So it's not unreasonable at all. I think it's going to fall down below my price target again, where I can start picking up shares in the next month. So next up is Amazon. Well, it's trading at one of its cheapest valuations ever. And we all know it's an incredible company. It's doing amazing things. It's got tentacles and everything. And every single one of those continues to grow at a very, very nice, steady growth rate. But yet here we are trading at one of its cheapest valuations ever. Reasons? Why? Why is Wall Street doing this? What the heck's going on? Nobody freaking knows. Great. My advantage. Anything under $200 to me, I'm buying up Amazon, just simply DCAing every time it gets underneath there. And man, this is just going to be a big winner long term. Short term, who knows? It's Wall Street. I don't freaking care. Continue to give me unreasonable and unwarranted discounts on Amazon, and I'll continue to buy shares of that stock. Next up is Meta. Huge, huge news with the WhatsApp monetization. We've been talking about that on this channel here for 3 years. That when they decided to monetize, they hadn't even been monetizing WhatsApp. When they decided to do that, it's going to be successful. It's going to be very easy for them to turn on. And I agree, it might not make as much money, obviously, as compared to the advertising arm that they have in the US, obviously, because we spend the most, right? Same thing right here on YouTube. If your audience is mainly US audiences, you get a higher rate of payout than you do for our European friends and friends in other parts of the world, where much more of their audience is based in other parts of the world. They don't make as much money. But the entire world uses WhatsApp except for us right here in the US. So although it won't have the same effect as it would whenever they turned on monetization with, other apps, for example, that's okay. It still doesn't mean it's not going to put billions of dollars to the bottom line, because guess what? It has billions of active users. Don't think you understand how many, heck, it can make half of what everything else makes. And we're still talking about billions of dollars to that bottom line as they roll this out. It is a money printer. The tariffs are going to have no effect on this business overall. They're leaning into the future, not ridiculously leaning into the future like they were a few years ago, smartly doing it much better than they were in the past. So, man, this is just a great company, a great stock. I understand Zuckerberg's not easy to like. I'm not necessarily the biggest fan either, but I can't say he doesn't run an incredible business and that this business isn't going to continue to print massive profits for me in the future. No doubt in my mind, this is a future $1,000 stock. Plus, hey, Wall Street still didn't really run it up all that much on the news. So it clearly shows you that they don't understand what the heck's going on right now. Once again, that's another opportunity for us. Not hype, revenue coming in that may or may not happen, whether it's 2 years from now or 10 years from now, nobody freaking knows. No, this is money coming very, very soon to the bottom line here. Again, it's just part of Wall Street. They're on a different trade right now. Great. It's to our advantage as investors here. So obviously it won't take much to send Meta down to my price target so that way I can scoop up more shares. Happy to buy shares last year in the $400 range or so. And hey, maybe I don't think we'll get that kind of a discount again, but I'm definitely ready to pull the trigger whenever it hits my price target. And if you want to see my complete watch list, complete with price targets for every single stock I want to buy, you want to see that bull and bear case on Google, you want to be a part of the best 6, 7, and 8 figure Discord out there, get your free coaching, get your free courses, be able to talk to me anytime you want, slide in my DMs, jump on our live Q&As, come to our live events. We have so much going on in the group, guys. Make sure you check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.